So today we're going to be talking about how to reform the international financial architecture. I'm sure a lot of you have heard about this issue. Many of you are probably constantly being asked to advise on what to do with the high levels of debt and fiscal and liquidity challenges that are facing your countries, how to finance development in Africa and so on, right? So I'm sure this stuff is very live to you. So I am delighted to invite our guest today. There's no better person to talk to us about this than Hanan Morsy. She's been working on this, coordinating the many of your ministers, actually, ministers of finance, in trying to tackle this issue. I can't wait to hear from her. Just as before we begin, and I hand over to Hanan. Hanan is at the moment the Deputy Executive Secretary and Chief Economist at the United Nations Economic Commission for Africa. And Hanan has a vast experience in leading this top quality policy and development work and building strong partnerships in international organizations and the private sector. Prior to joining the Economic Commission for Africa, Hanan was the Director of Macroeconomic Policy and Research at African Development Bank from about 2018 to 2021. She has served as an Associate Director and Lead Economist for the Southern and Eastern Mediterranean region for the European Bank for Reconstruction and Development from about 2012 to 2018. And she has worked in International Monetary Fund in various capacities for almost a decade, 2003 to 2012. In all these roles, Hanan has provided thought leadership, deep policy advice, and oversaw rigorous analytic work. She holds a PhD in economics from the George Washington University and a master's degree in economics from the University of California, Davis. And she's from Egypt. Hanan, it's a pleasure to welcome you. Over to you.
Thank you very much for inviting me, and it's a pleasure to be with you today to discuss this important issue and to engage with this group. Let me share the presentation. I hope you can see now the slides.
Yeah, we can see you. Just put full screen on it, and then I think we.
Sorry. Too many screens. Just a second.
It's the one on the way.
Yeah, it's just that how it's showing on my screen. Let me just. Hopefully now.
Yeah. That's good.
Okay, so we'll be discussing today, the work on reforming the global financial architecture. I will take you through the context of why, we really need these reforms and this work, but also in terms of the, the key milestones for the group that has been established, the ministerial group that has been established, and then the key asks and way forward. So in terms of the context, as you know, the continent has faced a series of multiple crises and overlapping global shocks. And this has affected the continent fiscal policy in terms of eroding fiscal space available and impacting recovery. So after the continent was hit by the pandemic, the recovery from it was adversely impacted by the war in Ukraine, by the tightening of global financial conditions, as well as by the frequent climate shocks that the continent has faced. And this have really set back decades of hard-won gains development gains that the continent had achieved, including in progress on SDGs, and have also led to millions of Africans falling into poverty, with around 150 million falling at risk of poverty as well. And as we speak now, the continent actually has the highest proportion of poverty worldwide, with 55% of the poor across the globe concentrated in Africa. This, of course, has impacted progress in SDGs. In many cases, it has stalled, and a number of cases actually has reversed. This is further compounded by the fact that the continent has huge financing needs that are only growing and continue to be underfunded. So the estimated cost of meeting SDGs by 2030 is about 1.3 trillion a year. In addition, the climate shocks are estimated to have an impact of 5% on average of GDP a year in Africa. And this basically leaves a huge financing gap for African economies. And if you can see here in the chart, the financing needs to meet the nationally defined contributions by 2030 is about 2.8 trillion US dollars by 2030. Yet the funding gap of it is the majority, 2.5 trillion remains as unfunded. And basically to fund these, to secure these resources would imply the need of increase in funding for African countries by about 10% of GDP a year. This is further complicated by the fact that we have been seeing rising debt vulnerabilities and eroding fiscal space. So as we can see here, the number of countries that are at low risk of debt distress have basically, vanished over, by 2022 to 2023. There are no countries in that category. While we've been seeing the number of countries that are actually at debt distress rising, as of 2023, rose to 8 countries, and those at high risk to 13 countries. And then not only that, but also the other challenge has been not only the level of the debt, but the cost of the debt. So we have been seeing policymakers having to really make very hard trade-offs, where the debt service basically is crowding out social spending. We have 60% of African countries that spend more on servicing their debt than they spend on health. And all of them spend more on servicing the debt than they do on climate action. So this was basically really kind of the context that led to the call for setting up the ministerial working group, which was established in 2022, February 2022, which is composed of African ministers of finance, economic development and planning, and includes also the United Nations Economic Commission for Africa, which serves as a secretariat. It has the African Union, and also other partners, including the IMF, the World Bank, African Development Bank, and Exim Bank. And the goal was to basically build an African consensus among African policymakers on the reforms that are required, and to amplify the African voice on the global stage in terms of what needs to be done. So following the establishment of the group in February of 2022, there there has been regular meetings, monthly meetings that the group has been doing with number of press releases, but also this has culminated in a resolution that was passed on global financial architecture that was adopted by African ministers of finance at the UN Conference of Ministers in 2023. This was also followed by these issues being discussed at the African Union Specialized Technical Committee on Finance, Economic Development and Regional Integration, and it was discussed both at expert meeting, but also at ministerial level in July of 2023. And basically this led the way to the these discussions being tabled at heads of state. And we actually had the presidential dialogue during the African Union summit of this year in February on global financial architecture, with 4 African presidents participating in this discussion and championing these issues. After that, we had also the African Union summit had a decision on the modality for participation of the African Union in the G20 and the priorities there, which is intended to basically build on the work of the Africa High-Level Working Group in terms of positions to advance in reforming the global financial architecture. So that's kind of a brief synopsis of what we've, what the background of the group and how it has been, has served as a platform for building African consensus and African common positions on the issues. So moving to the type of the areas of reform that have been discussed and views formulated. So let me perhaps start by giving a bit of the background. So in terms of the IMF special drawing rights and the global social safety net, the drawing rights were actually put in place in the late 1960s with the idea of these SDR supplementing official reserves to basically facilitate global liquidity. And the IMF Articles of Agreement stipulate that these SDR allocations are meant to be considered every 5 years in terms of, if they are issued, if they are needed to meet long-term global liquidity needs. So it's almost simplified, it's almost, a function to serve as a sort of like, the global central bank for global financial markets to ensure that long-term we have sufficient liquidity to meet the needs. In addition to that, the Articles of Agreement also allows for these allocations to be done in times of unexpected major developments. And this is actually what was used to issue the allocations that were done during following the pandemic. And out of the 12 basic periods that has elapsed since the establishments of or the introduction of SDRs, only 4 general ones and 1 special allocation, were utilized to issue SDRs. Particularly the global financial crisis is kind of like what brought to the forefront using this tool to address some of the issues that we have seen. In terms of the reforms, and we looked at that, in the group, when some of the issues that happen when these SDRs are issued is the allocation is done based on IMF focus, which means that bigger countries with higher quotas and stronger financial positions tend to receive more of these SDRs, while developing countries tend to receive less, even though they have tighter liquidity and they tend to utilize it more. So for example, for the 650 billion US dollars that were issued during following the pandemic, Africa only got 5% of that allocation. So some of the reforms that we have discussed in the group is the need to make SDR decisions in a rule-based analytical manner and to reduce the discretionary and political nature of these allocation processes. So basically, there are times where there were, by analytical evidence, a need to issue these SDRs by assessment of IMF staff, but because of the way the decisions are made and the political nature of it, that did not necessarily happen. So one of the things that need to be done is to make it more on the analytical basis, at least to a certain threshold, to enable SDRs to serve and to support this global safety net function. Another area of reform would be clarifying and operationalizing what triggers for issuing SDRs under unexpected major development allocation. And we propose that this includes things like, force majeure allocations in times of pandemics or natural disasters. Also things like, times when we have a global recession, as, economists define it by 2 consecutive quarters of global recession, and also to consider issuing them when we have widespread capital flights from emerging to developing economies, to developed economies. Another very important area is to ensure that these SDRs go to the countries that need them. So in essence, these SDRs are supposed to tackle liquidity issues. So to basically incorporate in the formula of the SDR, not only the IMF quotas, but also liquidity needs to enable countries that have higher liquidity needs to get a bigger share of these allocations. And another very important area in terms of directing or redirecting these SDRs is to enable rechanneling of SDRs to multilateral development banks. And for this, we know that there is a viable proposal that has been put forward by the African Development Bank and the Inter-American Development Bank on rechanneling of SDRs that is being considered at the IMF. So that would allow rechanneling of SDRs from countries that don't actually need it and are not utilizing it to NDBs where you can have actually a much higher leverage, 3 to 4 times of these resources, and these resources can be available for countries that actually need them and at affordable price. Another key issues, some of the other issues that we've been discussing in the group, of course, is the need for reform the global debt architecture. And part of the issue is that we have currently have debt architecture that is inefficient, ineffective, and fragmented. And the current architecture does not really align with the changes that we have been seeing in terms of the creditor changes in the creditor base, in terms of the composition of debt instruments, and timely and orderly resolutions have stalled. So this course, has been due to the increase in complexity of the creditor landscape, issues of new creditors that are not that have not been part of Paris Club, and limited participation of private sector in restructuring, issues of data transparencies, and so on. And what is needed is really an overhaul of the G20 common framework to be more timely, efficient, and transparent, to establish a comparability of treatment formula to help reduce technical disputes and accelerate the restructuring, but also to have expanded creditor committees to incorporate private sector, and importantly, to suspend debt service upon application, so that the countries that enter it, can have some relief, but also there is incentive to speed up the process more. And finally, there is a need to have bolder use of IMF lending into arrears to reduce the leverage of holdout creditors. Another area that is important, and particularly at the current time, is the need for review and update of the IMF World Bank debt sustainability analysis to take into account more issues of to be more focused on solvency issue and more attention to development financing. Of course, a major one of the major asks has been the need to have affordable finance at scale. And here there are two areas. One of them have to do with scaling up of both concessional and non-concessional financing. And the second had to do with bigger and better NDVs. So let's start with the increase of concessional and non-concessional resources. And here that applies across the board to both Bretton Woods institutions and also NDVs. For example, on the IMF side, there is a need to ensure the sustainability of the concessional window, which is the poverty reduction and growth facility trust, and to ensure that there is availability of or capacity to lend of at least 3 billion SDRs a year from 2025. And that would require, of course, increasing pledges to the trust, but also things like terminating the PRGT administrative cost reimbursement and considering really long-term solutions such as sale of parts of the IMF gold reserves. Another very important area that is it's not on the slide, but is very important in the current context, is the consideration of internal resources to fund this concessional window. Also, other important issues here would be the need to mobilize resources for the Resilience and Sustainability Trust at the IMF to increase availability of lending at long-term maturities, and to suspend the current policy, surcharge policy, actually review it overall, but also suspend it for at least 2 to 3 years, as it's affecting about 6 African middle-income countries, which is, and just to clarify, these surcharges are designed to be kind of like an interest, a premium or higher interest cost on countries that have repeated access of large facilities. And particularly with all the global shocks, a number of African countries had to resort to large loans from the IMF, and that resulted in interest rates that can be additional interest rate of 2 to 3%, which is significant. So there is a need to look into this and reassess, but also weigh this, particularly in the context that we have of multiple and overlapping global crises. Another on the other side for the World Bank, scaling up the concessional and non-concessional finance would basically mean ensuring sufficient funding for the IDA window to be to have a successful replenishment, and also with the aim of tripling these resources in the long term, and to also make sure that there is more financing for IPRD, both through optimization of balance sheet, but also through increased capital. And in terms of for NDBs to have bigger and better NDBs, of course, this is very important because they are a key source of cheaper finance, whether concessional or even the non-concessional, because it would NDBs, mostly the funding that they provide, would still be cheaper than having international capital markets, for example. And they can help crowd in as well the private sector. So some of the key proposals include, of course, the need to invest in global public goods and to ensure that African countries' priorities are addressed, things like food security, access to water and energy security, digitalization, regional integration, that they receive sufficient attention in terms of the financing and operations of MDBs, and that basically also the criteria for assessing concessional financing, such as, for example, the criteria for accessing IDA, need to be reviewed to consider beyond just the income level eligibility, to consider vulnerabilities. So when countries, middle income countries that face severe climate shocks can actually have access to concessional financing from IDA or other concessional windows, and not be left, having to borrow at higher cost for such vulnerabilities. There's also the need for MDBs to provide more guarantees to lower the cost of borrowing from developing countries, and to do more in terms of crowding in private sector through de-risking and blended finance. Another important area that has been discussed is the need to enhance market access for African countries. And here, for some of the issues that you'll be well aware of, is that there is evidence that African countries tend to end up paying higher cost of about 1.7% of interest higher relative to other countries with similar fundamentals in other regions. And that premium, part of it, of course, relates to the credit rating of African countries. And there are two areas that really need to be tackled here. One is issues of reducing information asymmetry. So basically reducing the judgment element in rating by making sure that the data is available and at a regular basis and reliable, so that it can be used for making the assessment, reducing the discretionary nature of assessments. So the need to basically build that capacity and support the African countries to have these type of data regularly available would be very important. And also the need to support and build capacities of African countries to design, structure, and tap innovative instruments, whether it's green bonds, as now, for example, African countries green bond issuances account for 0.2%, not even 0.5%, 0.2% of global issuances. So there is, a large room to really enhance that, but it would need to build internal capacity to design, structure, and build monitoring systems for these tools. There's also the need to have checks and balances in terms of establishing a regulatory framework for credit rating agencies. Currently, if a country receives a rating from one of the rating agencies, say whether it's Fitch, Moody's, or S&P, and they are not happy with that rating or they want to dispute, there is only internal recourse mechanism within these rating agencies. However, there is no, usually if you have this issue with a bank, and even as a customer, and there is that dispute, there is a regulatory authority that you can refer to if these are not addressed directly with that entity. So there is a need to have this type of regulatory oversight that is available to ensure, to have checks and balances for credit rating agencies. For example, for the European Union, there is a regulator that was set up following the European crisis to provide that. And there is a need to actually consider, at a global level, perhaps to have this at the Financial Stability Board, or at the regional level to have a Pan-African regulator for these ratings. Other things that would also help is to, increase the scale up of green financing by ensuring, having climate contingency clauses in debt contracts and making this universal. Also, in scaling up and benefiting from debt for nature and debt for climate swaps, and we've seen a number of African countries have done this over the last few years, and to scale up guarantees to lower these costs, whether these guarantees are sovereign guarantees or through MDBs. Finally, a key area of these reforms, of course, continues to be the need to amplify African voice. The recent, general quota increase at the IMF, were welcome. However, there is a need to really increase African voice and representation in the upcoming IMF quota reform to ensure that there is one higher voice for Africa in decision making, but also these quotas affect access. So access to resources are tied to these quotas. So by increasing the quota, there is also will mean higher resources will be available. And currently, the African continent with 1.4 billion population holds IMF quota that is similar to Germany with 83 million population. So that would be really key, but also, given the historical milestone that has been achieved in terms of the African Union seat at the G20, to make sure to utilize that seat and leverage it to advance the reforms of the global financial architecture, drawing on all the work that has been done. Okay, so way forward. So, we've already talked about the type of reforms that has been discussed. The priorities for this year, I would say, to definitely increase availability of concessional finance would be key. So ensuring that the concessional windows, whether IMF, World Bank, or MDBs, are well funded will be a key priority. Ensuring that we have a global debt resolution framework that actually works, and overhauling the G20 common framework will be a major priority. And we have also an opportunity with the G20 presidency being held by a country from the global south and by Brazil, to actually advance on a number of these reforms. Another one would be, key one would be enabling the rechanneling of the IMF special drawing rights to MDBs. And it will be key to really, advocate and push on that area to ensure that these resources are available. Another one, of course, is the, adopting and deploying the SDG stimulus that had been put forward by the UN Secretary General to make at least $500 billion available annually to developing countries, and to, cement the African voice and representation by reforming the quota. And finally, and this is a very important area that will be coming, later this year, is to leverage the UN New Tax Convention and to support the drafting teams to ensure a more just global taxation system and reducing the leakages from illicit financial flows. I just want to end up by saying that, emphasizing that advocacy matters. And this year is a critical year. We have seen before, how having a unified voice and, determination to get results, we have seen before this succeed in number of times for African countries. The high-level working group had built on actually earlier efforts by African ministers of finance that contributed to the historical allocation of SDRs in 2021. The current environment is becoming increasingly challenging with issues of shrinking fiscal space and a need to really address to have long-term solutions for these unprecedented nature of global shocks that we have been seeing, and overlapping shocks. And we have, both through the high-level working group and the African Union G20, see it a unique opportunity to really amplify the African voice and advance much-needed reforms. So we will have these critical moments, whether it's including in the G20 ministerial meetings, in the IMF World Bank spring and annual meetings, in COP29, and in the Summit of the Future. So will be really crucial to collectively push for change. And of course, as chief economists of government, We'd like to count on your advocacy and support to advocate at the country level and align at the regional level for tangible results and real impact. Thank you very much.
Fantastic. Thank you so much, Hanan. A lot of ideas here. Incredible tour de force. And I especially like the last point you made, which is the question I was going to ask the team here, how they can actually amplify your messages. But let me open up for questions. So this is a time now to have a really open conversations around the ideas that Hanan had put up.